Good morning and welcome back to Before the Bell with Roman Zane, your daily rundown that starts your financial day, grind context, not chaos. I'm Roman.
And I'm Zane. Whether you're in class, commuting, or just starting your day wondering what actually matters in finance, we've got you covered. No jargon, just thoughtful breakdowns.
Here's what's shaping up today's markets: political drama at the Fed, mega aerospace deals, and earnings that could rip through the AI evaluations. Buckle up and let's unpack it all. So, as we approach closer to the opening bell, US futures are exhibiting a mixed sentiment. The S&P 500 is inching higher and reflecting cautious optimism within investors, while the Nasdaq and Dow, on the other hand, are experiencing modest declines, suggesting a divergence in investor confidence across the sectors. This market behavior underscores the complexities that investors face as they navigate through the confluence of strong corporate earnings and emerging geopolitical tensions.
Indeed, and speaking of corporate earnings, all eyes are on Nvidia today as it prepares to release its second quarter results. The company is expected to report a significant revenue impact, approximately $8 billion. Due to the recent restrictions on its H20 chip sales to China, this development has the potential to influence investor sentiment in the tech sector, highlighting the delicate balance between innovation and international trade dynamics.
Turning to international trade, the US has implemented a 50% tariff on broad range of Indian exports effective immediately today. This move, which includes products such as textiles, gems, and machinery, is a direct response to India's continued purchase of Russian crude oil, a situation that the US has been viewing as indirectly as supporting the ongoing conflict in Ukraine. The imposition of these tariffs marks a significant escalation in the trade war between the two nations.
Adding to the economic uncertainty, consumer confidence has taken a slight downturn in August, erasing some of the gains from its previous month. This shift in consumer sentiment is attributed to a combination of factors, including a weaker than expected jobs report and the introduction of sweeping new tariffs by the Trump administration. While a recent inflation report eased some concerns about significant price increases, underlying inflation remains a point of vigilance for policymakers.
On the domestic front, the Federal Reserve is facing unprecedented scrutiny today, as President Trump has dismissed Governor Lisa Cook, citing allegations of misconduct, and that move that was very controversial and raises questions about the central bank's independence. Governor Cook has announced plans to challenge her dismissal legally, setting the stage for a constitutional showdown that could redefine the relationship between the executive branch and the Federal Reserve.
These developments collectively paint a picture of a market at a crossroads, where investor optimism is tempered by geopolitical uncertainties and domestic policy shifts. As we head into the trading day, the interplay between these factors will likely dictate market movements and investor strategies.
All right, now it's time for a new segment called the Bell Ringer, where we take one headline, an earnings report, or a market signal, and attempt to try to unpack it for the context and the implications that go along with it. Today, we're diving into Nvidia's upcoming earnings, a report that's particularly important, not just for the company itself, but for the tech sector as well, and broader equity markets, especially those in AI and semiconductor plays.
That's right, Roman. Nvidia has become a proxy for AI enthusiasm in the market, and investors are looking beyond just revenue numbers. Key areas to watch include guidance for the next quarter, growth of the H20 chip in international markets, and the adoption curve in enterprise AI deployments. Each of these factors could dramatically affect investor sentiment. A small tweak in guidance can cause outsized swings in stock price because expectations are so high.
Exactly, Zane. From a macro perspective, NVIDIA's report also ties into the global technology supply chains and the US China trade dynamics. Restrictions on chip sales directly to China could affect NVIDIA's revenue, but they also could signal how policymakers are influencing the sector. A strong earnings beat could reinforce confidence in the US semiconductor dominance, whereas a cautious or weaker than expected results could put more pressure on AI related stocks across the board.
Now, coming from an analyst standpoint, one actionable approach is to model different scenarios. For instance, estimate revenue if the H20 chip sells at 50% of projected sales versus full adoption. Then, stress test margins assuming increased tariffs or supply chain disruptions. That allows you to quantify potential upside and downside rather than reacting purely to headlines, which a lot of people tend to do. It also helps illustrate how forward looking expectations, like those priced into futures and options, interact with company fundamentals.
And don't forget the sector impact, as a positive Nvidia report could definitely lift semiconductor ETFs and those leverage ones. Ooh la la. AI focused growth stocks and even software companies are very much reliant on high performance chips. Conversely, a cautious outlook might trigger a rotation into defensive sectors such as utilities or consumer staples. The key takeaway for investors is to contextualize earnings in both a micro and macro term. And you got to think about it this way: what does it mean for the company, the sector, the market sentiment as a whole?
Very good questions to ask and very beneficial. Finally, the behavioral angle. Markets often overreact to narrative driven headlines using a structured approach, scenario modeling, sector comparison, and probability weighted outcomes. Gives you a disciplined framework to decide whether to increase, trim, or hold positions based on data rather than emotion.
I agree, Zane. So, the bell ringer takeaway is NVIDIA is more than a stock report. It's a lens through there we could see the AI boom, the AI bubble, trade policy risks, sector rotations, and market psychology. By breaking it down this way, listeners can practice thinking like analysts, connecting macro signals, corporate fundamentals, and potential investor behaviors before the bell even rings. All right, now let's take a look at the escalating US India trade tensions. Earlier this week, the US imposed a 50% tariff on a broad range of Indian exports, including textiles, gems, and machinery. This move is officially a response to India continuing to purchase Russian crude oil, which the US sees as indirectly supporting the ongoing conflict in Ukraine. But beyond the headline, there's a lot to unpack.
Absolutely. So let's unpack it. First, let's consider the economic impact. India is one of the world's largest exporters, and the US is a key consumer market. These tariffs could disrupt supply chains, raise input costs for American companies, and ultimately affect prices for consumers. For sectors heavily reliant on Indian imports, apparel, jewelry, and certain machinery components, the cost shock could compress margins and slow production.
And then there's the geopolitical angle that you got to think about. The tariff escalation isn't just about trade economics, it also showcases a signal, hardline stance by the United States government on energy policy and alliances. India has to balance energy need, geopolitical alignments, and domestic economic growth. If India retaliates on the US with tariffs, we could see a tit for tat escalation that impacts bilateral trade volumes, investor sentiment, and currency volatility.
From a market perspective, investors need to think about both direct and indirect effects. Direct effects hit companies that import or export goods between the two countries. Indirect effects, on the other hand, ripple through global supply chains and investor confidence. For example, multinational corporations with exposure to Indian manufacturing might see stock price adjustments due to margin pressure or uncertainty about regulatory risk.
Finally, the timing in all of this matters. These tariffs come just ahead of the end of Labor Day trading window, which historically sees lighter liquidity. Any unexpected news or reactions could amplify short term volatility, particularly in ETFs, futures, or ADRs tied to the Indian markets.
So, the key takeaway to this isn't just a trade story, it's a lens into global risk, policy uncertainty, and strategic decision making. For listeners, the best approach is to stay informed, contextualize market reactions, and consider how sector and geographic exposures might be impacted before making allocation decisions. That wraps up today's Before the Bell. We hope this gives you a clear lens on today's markets, from Nvidia's earnings expectations to the unfolding US India trade tensions and broader macro signals. If you enjoyed this episode, please subscribe, leave a rating, and share with anyone who could use a thoughtful start to their trading day.
And a big thank you to everyone following along. We genuinely appreciate your engagement and curiosity. Don't forget to connect with us on TikTok, YouTube, and Instagram at Before the Bell with Roman Zane for quick clips, updates, and insights throughout the day.
And of course, this is going to be a common theme. You guys are going to hear this all the time. Nothing
Mhm.
here is financial advice. We are students sharing our learning process. As you start your morning, pay attention to the macro headlines, keep an eye on market sentiment, and maybe even track how geopolitical developments and earnings reports might affect your watch list or portfolio. Enjoy the rest of your day, whether you're following the markets, catching up on economic news, or checking out sports headlines, and we'll see you before the bell.